can you put your brain on, please?
I don't invest in people that are not willing to back themselves.
I don't know where we've gone in this discussion.
You could make somewhere between £500,000 and £900,000.
You can pretty easily walk away. You don't need to tell me how to offer, guys. Thank you very much.
Property Elevator is back for Series 8 and we are bigger than ever. This year, we see our angels looking to invest their hard-earned cash into some of the best property deals on the market. But will they be keeping their lights green? Or will they be turning them red? Our angels are seasoned developers, investors and mentors with a combined experience of over 100 years. Our debt angel is Scott Marshall. Our equity angels are John Howard, Paul Mahoney, Hayley Andrews, Nicholas Woolwork and Ranjan Bhattacharya. It's up to our contestants to impress one or more of our angels for that all-important guidance and funding that they so desperately want. So, let's meet some of today's hopeful candidates, pitching their deals on today's show. Andrew, it's great to have you with us on the show today. Where have you come from?
I'm based in Dorset, so I come up from Dorset.
Okay, great. And tell us a little bit about your experience in property development.
I've been in property for just over 20 years. I've done numerous different conversions and refurbs and things, but I've got a particular niche that I want to explore with the angels today.
Okay, excellent. And is the deal that you've brought in Dorset?
Neighbouring county, it's in Wiltshire.
Okay, great. Is there anyone in particular that you think might like the deal?
Hopefully all of them.
Hopefully all of them, okay.
Nice and quick and profitable.
Yeah, so multiple offers hopefully today.
Hopefully, that's my ambition.
Great, well fingers crossed.
Thank you.
I'm going to send you up into the elevator and we will chat about your results when you come back down.
Great.
Good luck.
Thank you. Thank you. Hello, Angels.
Hi.
Hello.
My name is Andrew Featherstone, and I'm here to ask for investment of $413,000 in return for 50% of the deal. So the project is in Wiltshire, just south of the M4. It's between the market towns of Devizes, Carn and Melksham. And in terms of progress, I've had my offer accepted for $960,000. Legals are ongoing, and I've had a valuation report, a Red Book valuation report, which was very satisfactory. So the project is 6 units, 6 houses. It's in a farmyard. So we've got a 6-bedroom farmhouse, a 2-bedroom cottage, and then in a courtyard we've got a 2/3-bedroom bungalow and 3 holiday cottages. Works involved will be a light refurb, and I'm going to split up and sell each house individually. Obviously there'll be some light refurbishment, it'll be mainly painting, decorating, a few repairs and some fencing work to split up the gardens for the various units. This is a quick project, hopefully in and out with it within a year. It's very profitable due to the title split strategy, and then I'm hoping to give you a 51% return on your capital.
Excellent.
What security do we get on that?
I normally do my joint ventures where we set up an SPV limited company, 50-50 shareholding, so you will own 50% of the company. Obviously the company then borrows some commercial finance coupled with your equity input.
Okay.
Okay, very good.
What is it now?
Basically, it is 6 individual units, so they're already there. So they are, the farmhouse is lived in by the seller. They've lived there for a couple of generations.
Okay.
It was a dairy farm.
It's a family business running
and
some lets.
they're sort of in their sort of 60s, 70s, want to run it all down, want to move and downsize basically.
Okay, and the GDV is, I don't think you mentioned that's the most important thing.
1.675 million.
1.675 million.
And what will you spend on it to get the properties ready for sale?
So not much. So the key to this is not doing too much building work. So it'd be very easy to go in and want to replaster, rewire, replumb, but all we're doing is smartening up. So they're all pretty good nick really. So mainly it'll be decoration and a few carpets, no new kitchens or bathrooms, anything like that.
Okay.
The 3 holiday cottages are pretty good nick because they obviously have to be kept up together. And the budget for the build cost and professional fees is 98,000.
So basically 100k for all 6.
Yes.
Why is the uplift so good if they're
Exactly.
too
The
bad?
title split is forcing the appreciation by
Right.
splitting the titles.
Yeah.
How big are the holiday cottages,
Hang on,
please?
one at a time, one at a time.
Holiday cottages.
no one else is talking, Tom.
There's 3 holiday cottages. We've got a 1-bed, which actually is probably a 2-bed.
And what square
then-
footage? Sorry.
But-
What's the square footage, more importantly?
It's in the pack, but they're roughly 500 square foot each.
Oh,
What
really?
is their
Okay.
planning status? Can they be sold to owner-occupiers, those holiday cottages?
They can't at the moment, but I'll talk about the planning in a minute. But they have got planning. Sorry, they have got holiday let conditions on those 3.
Okay.
We've had discussions with Wiltshire Council. We have a good working relationship with the deputy head of Wiltshire Council on another project, and he would support that application if we would put it.
So you've had indication that those can be converted to normal
Yes.
family houses?
C3.
Okay. Okay. What are the, I mean, it's a rural location. What are the comparable sales properties in that area? Because there can't be that many of them, I would guess.
No, obviously they had the Red Book valuation.
Yeah.
They did the comparables, which is where the figures come from the GDV. I've obviously been to see a lot of agents and use Nimbus maps as well. And the average sale price is £306 per square foot in the area. That's sold properties within a 2-mile radius. There's 15 of them, but I'm budgeting on selling for £240 a square foot rather than what Nimbus would tell me, which is 306. If they sold for 306, that's an extra sort of 400,000 on the GDV.
Yes.
Andrew, what's your experience? What else have you been up to in the last 20
Been in
years?
property for 21 years.
Yep.
Before that, I was a building contractor. So I do understand what's involved in building work and can project manage sites pretty tightly.
Yep.
I mean, I love title splits. Out of all the projects, the strategies I've done, then I've always sort of erred towards the title split because it's so obvious, and it buy something wholesale and sell retail, really.
How many have you done, Andrew?
I did one very successfully in Somerset 2 years ago. That was 9 units. That showed a very healthy profit. 55% return on cost.
I suppose I'm just trying to get a bit more detail. You said 21 years you've been in. Is that working for yourself over those 21 years?
Yes.
Yeah, okay.
Yeah.
So it sounds too good to be true. Now I understand what you're doing. You're forcing the appreciation by splitting the title, doing very little work. So where's the risk here? What?
400k he needs.
Yeah. No, I know.
That's the risk. He needs a lot of money. Not everyone has 400k.
No, I mean, well, I mean, where's the risk in this project? What could go wrong?
Good question.
It's a good question.
That's why I like it, because the risks are very low. I mean, what could go wrong? Obviously, market could drop, but I think on my sensitivity, the GDV would have to drop by 450,000 before your return was 0. So that's
We don't like the term zero.
but that
The reason I'm asking is because it seems like a
What's the
relatively
weak
low
point?
risk, easy deal.
exactly.
Title splits are.
But I'm also
Often.
of the opinion sometimes if it sounds too good to be true, it may be too good to be true. So how confident are we that you're going to be able to split the titles on here and get the GDV that you're anticipating?
And the planning.
And
The planning, there's
Yeah,
planning risk,
planning.
isn't there, on the cottages?
I mean, the GDV values the holiday cottages as holiday cottages,
Okay.
which is obviously lower than residential.
Oh, really? So you're
obviously-
1.675?
Obviously, my plan is to go in and try and release those holiday
Yeah.
let conditions,
Yeah.
which I've done on another project in Devon. So I have experience of that, and obviously that will then increase the GDV even further.
The planning is one issue. The other issue, I think, with these rural properties is how the services are connected. Because sometimes if it's been in one ownership, it's just a single electric going in and all of that.
Someone that's never
So you'd
known-
have to split these for individual dwellings, and that could add a lot. Have you looked into that for separate
Yeah.
water,
You're
electric, all the
quite
rest?
right. That is the first thing I look at in any.
No, I know you'd have looked into it. I just wanted to hear
because
the answer.
that is the key thing.
Yeah.
I mean, electricity is the key thing. Water sometimes is shared, but we can get around that
Yeah,
with
yeah.
Wi-Fi meters on each unit, which I did on my last
Yes.
project. But yes, they have got separate supplies to
Oh, they have?
each of the four, the three main units. The holiday cottages are on one supply, but I've
split
looked
that
into it.
then,
It's
yeah.
very easy to split that, should we get the residential consent on each one.
You
And
wouldn't do it without.
drainage, septic tank.
Exactly, that's the other thing I look for.
Yep.
That was put in a couple of years ago.
So it's a modern septic
It's a
drain system
modern-
to,
well,
to
it's-
do
it's-
all
it's a
5
sewage-
units, 6 units.
It's a sewage treatment plant,
Yeah.
doing all 6.
Okay.
And I know the sellers quite well now because I go and have a cup of tea with them every time.
Very
I'm
clever. We
there.
like that. Yeah.
Yeah, they've just, what was lacking was the building reg sign off
Yes.
on that, but I've just managed to get that.
Okay,
Very good.
so, okay, listen. I've made a career of title splitting, as it's called, which is the modern terminology I can't stand. All you do is ring your solicitor up and say, we want to bang these out individually, sort the leases out or sort the freehold out. It's no big deal. And I'm sick to death of people doing a 2-day course on title splitting because it's just ridiculous. But anyway, there we go. I've said my bit now.
Have you written a book on that?
No, not on that bit.
Not that
so,
one.
No, not that one.
Be
So
3 pages
it's so
long.
simple, it takes one line. It doesn't need a book. So I've done this lots of times in the past myself. What are the values of the holiday units as they stand, please? What was the Red Book valuation on those?
160, 170 and 200.
Okay. Yep. And what are they going to go to with a change of use?
Well, my last project was about 45 minutes west in Somerset, which is equivalent sort of values. We sold all the 1 beds for about 230, 2 beds for about 250.
Yeah, Andrew, I think I'd really want an agent to have confirmed that before you came in here, to be honest with you.
I was about to ask the same question. Have you got 3 or 4 valuations on this GDV and the individual units? And what's the demand for those? What's the average sale time?
They are small.
That's what I was going to
small.
say. Is there demand for such small properties in the rural area?
Yeah. But I've just sold 9, so yes, there
Andrew,
is.
can I just ask you? When at the start of the pitch, you said that you're looking for £413,000 for a 50% stake. If the purchase price is 960, and let's call it £1 million all in,
Yeah.
the 413 is a very precise figure. Where's the rest of the money coming from, and how much are you putting in yourself into both the purchase and that 100k you need to spend to get it all split and planning, etc.?
So basically the 413 is a 40% of the purchasing costs.
Yeah.
So the purchase price plus fees, etc., and stamp duty. So I have had indicative terms from a few lenders, and I reckon that we can borrow 60% of the rest of the money from them.
Okay, so any other questions? Do you want to sort of just
Summarise.
summarise, please?
So purchase price 960k. Call it £1 million. I know it's slightly more, but let's call it £1 million, including all stamp duty and fees. You're looking for £400,000, slightly more, but £400,000 to buy the property. To buy the property, and you're giving a 50% share. It'll cost you 100k to do all the title splits, the planning consents, the slight refurb, and then you'll sell them on a very conservative basis at 1.675 million, and potentially up to 2 million, depending on whether you get the planning consent for the residential on the holiday cottages, and there's also some upside within the existing residential properties as well. So total, you could make somewhere between £500,000 and £900,000.
Okay, so let's start with some offers if we can get Andrew an offer. Paul, would you like to go first?
Yeah. I mean, I agree with Hayley. It kind of just seems a bit too good to be true. 1.1 million in, 1.7 out. Why? And I think I also agree with Scott. So far as $5,000 in from you and $400,000 in from me doesn't really stack up. So, and therefore, if something goes wrong, you can pretty easily walk away without much downside risk at all. So for that reason, it's off for me.
Okay.
Same for me. So I echo what Paul says. I don't invest in people that are not willing to back themselves, and I would be concerned that there is no pain for you. It's all on me.
Thank you.
Interesting.
Nicholas, what would you like to do?
It is a really tricky one. I think the biggest risk in this deal by Hayley not investing is you know, and I mean that with all due respect. You're extremely credible, you're highly investable, but with absolutely no skin in the game, a PG is worthless. And so you're probably not financeable.
I don't know where we've gone in this discussion, actually, because we've had plenty of people on the show who have come and said,
Absolutely.
look, here's the deal.
Yep.
They haven't got it. They don't want to put in a bean. They're putting their expertise and putting a deal in.
They're not asking for 50% of the profit, though,
No,
are
but
they?
we could go back.
It's more like 80% to us because the
course.
risk is on our side,
Then
20% to you, which is still actually
Then we
a
can
very
go
good
back and
deal.
make that as an offer.
Yeah.
Exactly.
But it doesn't necessarily mean that everyone comes on the show and puts in equity into the deal. I think we've gone down that route too much a little bit.
What would you like to do on this deal?
I think I would like to disagree with Hayley and Paul. I don't think this is too good to be true. I get what you're doing with the title split, and you've actually explained why the uplift is achievable, because with this, a lot of the issues are down to planning, regularization of existing use, the whole thing that all the properties were bound together and you've managed to get them unbundled so that you can decouple them and sell them individually. So those were the issues that you have systematically come up with a plan to solve, which I like. I think the only thing I don't quite get, and maybe it's my lack of knowledge of rural markets, is the size of the end houses that we've got and the marketability of those, because I tend to see these, 4 or 5 bedrooms or 3-bed minimums, these barns that get done and split up in courtyards rather than the small stuff. But listen, I think this is great. The problem I have with this is you seem to be an expert in this, and I can't really add to your expertise in this area. All I'd be giving is cash, and that's not the sort of deal I do. I tend to like to offer some expertise in there as well.
Are you seriously saying
We
that?
went round the block, but we got to the same destination.
So the answer is, no.
We went round the block. Sometimes it's worth going round the block.
Well, normally it's Nicholas. Can I just say, it's normally Nicholas going round the block, but for once it's you, Ranjan.
So basically you agree with Hayley?
So Nicholas, what's your decision, Nicholas? I think we've got to make a decision. So Nicholas, what's the decision?
I'm going to make you an offer, okay? And it's going to be based on the fact you are financeable and can take out senior debt with Scott, okay? If you can't, I'm not going to take that debt out for you. It's too much
Well, it's not an offer then, is it?
Okay. It is an offer if he's financeable. You've got to be financeable to a point, John, if you're asking for this sort of deal size.
Yeah.
I don't think
I'd put it in the equity.
Of course
John,
you do.
John, give me a chance to speak, please.
Or have a higher percentage.
You don't need to tell me how to offer, guys. Thank you very much.
Trying to help you over here. Moody.
My offer would be that we would offer you any equity required. I think it would be a little bit less than the 413 you need. I'd like Scott to maximise the senior debt. So I'd like to offer you all of that. There would be an override of 12% on that interest rate. And I'd want 60% of the profit after that's all taken into account.
Right.
Okay. You've heard from all the others. So it's now me and you, Andrew.
Okay.
Okay? Me and you with a similar age. You've got a bit more energy than me by the sound of things, 2 young children. I'm most impressed with that. This is the deal. 80-20 in my favour. I'll fund whatever the bank won't fund. You don't need to worry about not having any money to put in. I'm not interested in that because I've got the money to put in. And I like to think that if I'm involved, Scott will come on board with a sensible loan to value, which I'm sure he will do.
Mates rates plus 5% for you, John.
80-20, we'll get on it. We might need to sharpen the deal up slightly, depending on when we want to exchange on the planning, because that will affect the valuation and all the rest of it. But you've got a great relationship with the owners. I love the fact you go and have a cup of tea with them. Everyone wants to do emails, everyone wants WhatsApps, no one actually talks to anybody anymore. You're like me, you go and talk to them, you do a deal. I love that. I like you, I like the deal, and I want to work with you. So my offer is 80-20 in my favour, no risk to you. We get on with it, you manage it, you do it. I'll come and see you and have a cup of tea from time to time, and we'll get the deal done. I'll have my building surveyor oversee it with you to support and help you. He works for me full time. And we do it professionally and properly as you've done other deals in the past. That's my offer.
Well, we can all do it professionally and properly, obviously.
Mine's a better deal when you work it out.
I'm not sure it is, but that's fine.
What would you like to do, Andrew?
I would like to go with Nick. I'd love to go with you.
Okay, great. Okay. Brilliant. Really looking forward to working with you. Brilliant.
Look forward to working with you. Well done. Well done.
Well done, Andrew.
Thank you.
I think you made the wrong decision, but good luck to you.
Thank you. Thank you. Thank you. Thank you. Thanks. Thanks, Heidi. Thank you. Thank you.
Thank you.
Well done.
So, John, last season, when I offered someone an 80-20 split in my favour, you berated me. And now you've gone down the same path.
I think yours was 95 to you, 5%.
Oh, no.
The poor lad.
It was, and he was 15 years of age.
It was unbelievable. It wasn't that bad.
Ripping a kid's eyeballs
I
out.
reckon
You're losing your touch.
I'm losing my touch. I think
You're letting him beat you. What is
well,
going
he's
on?
learning. He's learning from the master.
I am learning. I've
He's
been
learning from the
mentored by
master.
John, that's why.
The only thing I think I did wrong there, I don't know what you think I did wrong, because I don't think I did anything wrong. Of course I don't, but maybe I was not quite generous enough. Maybe it should be 75 or 30-70. Maybe.
I think you lost it on the 80. It's just too much. I mean, realistically, the 12% to him on.
But he's got no money to put it
but
on.
I think the other-
400 grand.
other
It's
thing,
only,
though-
it's only 40 grand.
Had he have gone with you, then that would have been less attractive for me because
Oh, thanks.
there wouldn't have been
Unbelievable.
because there wouldn't have been enough
Unbelievable.
upside
Do you
potential
know
for him.
I'm not being funny. Do you want
So
to?
he's not motivated. He
That's a
would
good point.
not be
Can I-
motivated. He would not be motivated to
No.
deliver on that transaction.
Listen.
with only 20% of the profit.
All you
And
need
it's
to
very
do,
important
Will-
to make sure. It's really important to make sure that there's money and cream in the deal for everybody involved.
All
And I
you-
thought you were being too greedy.
All you need to do is Google my net worth, and you know full well
think
that it was
John's
better
being
to
I
go
thought
with
John was
me.
being too greedy.
I think that's
Unbelievable.
popcorn in the
Money
kettle
talks
black,
and
isn't it?
wealth whispers, John.
Exactly. I taught you that as well, by the way.
It's your own
I
phrase.
use that phrase all the time.
Welcome back, Andrew.
Thank you.
We had a bit of a battle off with
yeah.
John and Nicholas,
That's right. Yeah.
but you went with Nicholas in the end.
yeah.
Tell me why.
Well, normally when I do joint ventures, it's a 50-50 split.
Okay.
John offered 80-20% in his favour, which was a little bit, couldn't quite handle that, but Nicholas and Scott doing 60-40 in their favour,
Okay.
and that clinched the deal.
So Scott's involved as well.
That's right.
Excellent. So you've got two brilliant people in your team there. I think you'll make a great trio.
Thank you.
What's going to be next for you?
We're speaking next week on a Teams call, and then we've got a date in the diary to have a site visit, and then we go from there.
Excellent. So it's all in already.
Yeah, so
Brilliant.
Good.
Well, best of luck.
Thank you very much.
Can't wait to see the updates.
Thank you very much.
And all the best with it.
Yeah, it's been great. Thank you.
Thanks. Penny, it's great to have you with us on Property Elevator today.
Thank you.
Tell us where you've come from.
So I've come from Coventry in the Midlands.
Great. And are you a developer?
I'm not. I'm actually an interior designer, 20 years in the industry. So yeah.
It's great when someone comes on the show from a different perspective, from a developer or an investor. Great when you've got a good eye for design as well.
Yeah.
Do you love what you do?
Oh my gosh, yes. There's been nothing else since I was about 8 years old. So yeah, I love what I do. I'm very lucky.
Living the dream?
Yes,
Yeah.
exactly.
So what makes you want to move on into investment then?
Well, I'm lucky enough to do this for clients on
Yeah.
a day-to-day basis with their own homes, and I've done it with my own home, and I'd like to replicate everything that I've learnt and get into the property industry with some really good mentorship. So,
Excellent.
yeah.
Well, you're in the right place for sure.
Definitely.
Best of luck.
Thank you.
I hope it's good news.
Fingers crossed.
We're going to send you up into the elevator now.
Thank you very much.
Angels, and we'll see you when you get down.
Cheers.
All right. Good luck.
Hi everyone, I hope you're all well.
Hello.
I'm Penny Johnson and I'm here today to pitch a low risk, high reward property investment. I'd also like to introduce myself as a potential opportunity in terms of property development for future projects. I'm seeking £563,000 for the purchase and renovation of a commercial property in Bulkington, Warwickshire. Bulkington's an area that's poised for growth, close to HS2, offering affordable and aspirational living. The property, along with its adjacent land, has approval for three-bedroom homes, but I believe that one house could be a 4-bedroom. The planning that's been submitted is very simple, and I think that there's more that could be done to get a better market value. Along with the property, there is adjacent land which will provide 45 square metres worth of garden to each premises, along with 2 parking spaces to the rear of the properties. We'll acquire the property for £400,000. It is currently on the market for £475,000. I'm looking to invest £163,000 into renovation services and work, and that also includes a contingency. And I expect each unit to sell for £260,000, giving a GDV of £780,000 and generating a gross profit of £217,000. With 21 years as an interior designer myself and as 8 years as a business owner, I've built my company organically from the bottom up. With the investment, we'll have homes to market within 4 months. The investment offers an 80-20 split in your favour, with a 27% ROI and a projected gain of £173,000. Thanks for considering this opportunity to mentor me into property investment. I look forward to answering any questions and discussing how we can make this a success and many more projects in the future. Thank you.
Brilliant. Thank
Penny,
you.
thank you very much indeed for that. Who would like to go first?
A good pitch. I like it.
Thank you.
I wanted to ask you about the build costs. So you're basically creating, when you say 3-bed homes, these are essentially going to be apartments, isn't it?
They are houses.
You're splitting them vertically?
Yes,
Okay,
so it is a current commercial premises that used to be three-bed homes.
Oh, I see.
And an accountancy firm bought it many years ago and converted it into one very large building, and they are selling it with planning permission to convert it back.
Yes, I did think, because looking at the picture, I mean, it looks resi.
Yes.
So the best commercial to resis are the ones that already look resi in the first place.
Yeah, they're only small. Paul, what would you...
Yeah, can you tell us a bit more about your background?
Found myself working in multiple industries within interior design. So the show home industry, the construction side of things, the manufacturing side of things, and as an interior designer. And then 8 years ago, made the move to start up on my own. I love what I do, and property has always been something I wanted to invest into. My expertise is something that people come to me for beyond the interior design side of things.
Penny, are you putting any of your own money into this deal?
So no, unfortunately, I don't have any money to put in. However, I have a lot of equity in my house, and I am prepared to look at all opportunities in order to make this happen, because this is the start of my journey, and I want to shoulder as much risk as I can, but that's how I'd have to do it. So,
Can we just delve into the refurb costs a little bit? How are you breaking that down in terms of where's the big spend in the building? Does it need new windows? Is the roof okay? Just talk about the fabric of the building, because I can't see it.
Yeah, of course. Yeah. So there's obviously, as always the case with these sorts of projects, there's different levels that you can go to. I have not done the windows, but they are already double glazed UPVC. looking at them, some of them have been upgraded and there's just a trim change to sort of 50% of them. In terms of other areas, obviously you've got the plastering, the electrics. There's currently 80 amp into the property, and that's across the 3 spaces. So I have costed in to allow for potentially DNO, 3-phase, if it's necessary.
Are the buildings wired as one now, or are they still wired as 3?
Yes, it's currently wired as 1. It would need a full rewire and 3, yeah.
Do you know if your builders costed, just to bottom out the refurb discussion, costed things like acoustic flooring or walls between the properties?
It's a vertical conversion. It's a lot easier. It's a vertical conversion. So it's basically party walls.
So wall to wall, but it's
much easier.
Wall to wall rather than flooring then, wouldn't it?
Yeah. It's much easier. That's why the build costs a bit lower.
I'm assuming the existing walls are there, but they're just not through at each level.
Yeah, so they've basically taken each of the rooms and sort of knocked down to sort of create a load of connected offices.
Yes.
And on the top floor, they've pinched a small amount of the second rooms and put a corridor all the way through. But it's all stud work.
Yeah.
Most of it's already stripped.
Yeah.
And so it's quite a simple sort of reconfiguration.
Can we go to you, Scott?
Yeah,
for
with
some
pleasure.
figures?
Okay, so let me just run through some figures with you if I can. So purchase price 400, cost to do the work 163, stands you in total for the project of £563,000.
Yes.
Okay, so that's a total cost. Typically a loan to cost, up to 85%.
Yeah.
Okay, which means that you could fund, or I could fund, £475,000 worth of the £563,000 overall cost, which means that there's a shortfall, an equity requirement of £88,000 plus stamp legals, etc. Okay, call it 100 grand.
Yeah.
In terms of the GDV is £780,000.
Yeah.
The loan to cost of 475 that I talked about.
Yeah.
Okay. You could get up to 70% GDV, which is 545k. So there's more than enough headroom to allow the interest to roll up from the 475 against a 545 total exposure that I'd be looking to max out at. So from that perspective, if you can raise the 100 grand in the room equity requirement that's needed, then it's of interest.
Brilliant.
So shall we go to offers? Ranjan, would you like to go first, or?
I think it's a great deal. I'm just not. It's not really the part of the country that I do, and that's the only reason I'm out. I actually like the deal. I like you, and I'm very tempted to get out of my box a little bit. But
get out of your circle. It's a circle. The M25 is a circle.
It's next to HS2. It's just a village and
so
an
I can
area
get up there
that.
pretty fast.
You've said no now.
Yeah.
Okay. So who would like to go next? Hayley, what is your decision?
I'm still thinking.
Okay, let's go on to Nicholas.
Yeah.
It's hard. It's so tempting. I really like you. I think you're highly ambitious. You've proven you can run a business. You just need a bit of guidance. I think, unfortunately, this deal isn't quite for me. For the same reason as Ranjan, actually, I do prefer a bit more down south. I would go further north with a bit more of an experienced operator. So it's just a combination of not quite the right experience and being too far away. So if you were growing a business up there, I'd be comfortable because I knew I could leave you to it a bit.
Yeah.
But I think you need a little bit more time, which I'd be willing to give you. I'd love to mentor you. If things don't work out today,
Brilliant.
Let's stay in touch.
Yes, definitely.
I'd love to help you out if I can behind the show, but this one's not for me. Sorry.
No problem. Thank you, though.
Yeah, I'll go next. For similar reasons, I'm predominantly based in Australia these days. So I think for something like this, I would need to be working with someone with a little bit more experience. There's nothing against you. You need to start somewhere. And I hope one of the other guys will fund the deal for you. But it's just not one for me.
No problem. Thank you for your time.
Good
I
research.
really like you. I think you're great. I love everything about you, your energy, your passion.
Yeah.
You know what you want, you go and get it. I love working with people like that. And you've got just something special about you. So I'll make you an offer for the 80-20 split that you've proposed, assuming that we get a quote for that £163,000.
She had a quote.
No, she. Well,
Yeah, it's not in writing, but my builder's put it on an Excel spreadsheet and broken down everything. So
Okay.
without it being on his headed paper, we have a quote.
Yes, if we can get that on contract,
Yep,
then I'd be happy to do a deal with you.
brilliant. Thank you.
Thanks for that.
Screw me over now, John.
Thanks for that,
You're a
Hayley.
partner.
I own quite a lot of properties around the HS2, in commercial property and also residential. It's quite an interesting area. You've sort of taken the wind out of my sails, Hayley, more than once as usual.
I'm so sorry.
What's okay? Do you know what I think?
Could always share,
Hayley?
John.
I think this. I think Hayley will be a very, very good partner with you.
I agree.
She's passionate about working with women, and I'm going to say ladies first and decline on the basis you promised to take Hayley's offer. How's that?
Oh,
How's that?
isn't he adorable?
Brilliant.
Is that all right?
That's fine.
So, not
I've never seen John.
chivalrous.
I go, wash my ears out.
We've got it
So-
recorded as well.
You have an offer from Hayley. Would you like to accept that
I
offer?
definitely would. Thank
Fantastic.
you so much.
Well done. Well done.
Look forward to working with you.
Well done.
Thank you.
And Scott.
Cheers.
Really? We're collaborating on a deal.
Well, there you go. Just shows you what a gentleman I am, doesn't it?
It's taken 8 seasons to get there.
Yeah.
Well, we're still waiting for you to be a gentleman, Ranjan. So, I mean,
Scott, I didn't pick up that you were a part of that deal with
Yeah.
me. I mean, it's great.
See the shock on your face. I've got to work with Scott.
No, I
now.
would never have offered.
It's like having a blind date and sort of walking in and being disappointed, wasn't it, Hayley? That
It was one of those
It's
moments.
one of those moments.
Hayley, it's like you've been catfished.
I've been catfished.
Yeah.
But you're dead happy.
I mean,
I am dead happy.
I think it's a cracking deal, cracking entrepreneur.
Nice.
I know you were
Yeah.
concerned about
Yes.
the build costs, but I
She's
think
great.
she's pretty much spot
glad
on,
that someone
quite frankly.
Well,
with
she's
that.
going to roll her sleeves up and get stuck in to keep the cost down.
I love the fact that she can do and just prepared to roll her sleeves up and do some of that work herself. You know that you looking at her with her lovely fingernails and what have you, you would never have thought that's what she's capable of doing. But I love the fact she's capable of doing
The
it.
biggest,
That's
I think the biggest thing.
Self-made as well.
Yeah, I think
love
the
that.
biggest thing about this deal is it's a vertical split.
Yes.
It's purpose built as houses originally.
Yes.
To put it back is very simple, and it shouldn't cost, famous last words, too much to do that work.
I mean, it's actually the textbook commercial to resi
Yeah,
deals
absolutely.
that people should look for,
sort of thing
properties
you-
that were already resi in the
It's
first
a
place.
sort of thing Ranjan dreams about, isn't it, Ranjan?
Absolutely. Just not too further north than Cockfosters.
No, well, 30 miles away from home is too long for you, it's too far for you.
Penny!
Hi.
Yay! How are you feeling?
Brilliant.
Good.
Fantastic.
Yes. And you've got a fantastic mentor in Hayley.
I definitely have. Yes.
You've got a good gal team there.
I know.
Yeah. So how did it go? How was your experience?
It was brilliant. I really, really enjoyed it. I'm not one for reading, so the initial pitch was, but once I got into it, and yeah, it was a brilliant experience, and they made me feel really at home.
Oh, that's so nice to hear.
Yeah.
I heard the Angels were actually super impressed with your pitch as well. They
Thank
said
you.
your delivery was amazing.
Oh, brilliant.
Yeah.
Not as bad as I thought.
No, absolutely not. So what's next for you then? I know you're very busy with your job,
Yeah.
but it's time to fit even more into the schedule now.
Exactly. Well, I'm not afraid to get my hands dirty, and I did promise that if that was needed, that's what I'd do.
Yeah.
So that's fine. But yeah, it's get this project rolling, and then hopefully a few more.
Brilliant. Well, I can't wait to see the updates.
Brilliant.
And keep up to date with the journey, and congratulations again.
Thank you very much.
Thanks. Vinay, welcome to the show.
Thank you very much.
Are you excited to be here today?
I'm very excited.
Good. Where have you come from?
I'm coming from Bromley.
Excellent.
It's not far away.
Yeah, not too far. And is that where the deal is as well that you've brought?
No, the deal is in North London.
Okay, so you'll have a little bit of a commute
I will, definitely.
And is there anybody that you're particularly excited to work with on the project if you do get it investment?
To be honest, all of them are great people, and I would like to work with all of them.
Okay.
But whoever gives me the offer, definitely I will be working with that individual.
What about your previous experience in property?
So I have been doing property since last 6 years. So I've been doing conversions, I'm doing ground up developments, and this is the deal I'm talking about is ground up development in North London.
Excellent. Well, good luck.
Thank you very much.
Please head into the lift.
Thank you.
I'll see you when you get out.
Thank you. Hello, Angels.
Hello.
My name is Vinay, and I'm a property developer investor, and I've been doing properties since almost 6 years now. Before that, I used to work in the capital markets in the city for almost 15 years. I have been doing since last 6 years conversions, ground up developments, and I did one simple flip as well, but it was way long back. Today I am here to present a deal which is in Wood Green, North London. This is ground up development. It has already planning for 29 flats and 2 commercial floors. And I'm looking for 1.6 million of investment and for roughly 200% return for the investors. What I'm offering is 10% coupon on the invested money for the duration money is being used, along with the 40% share in the profit margins in the end of the deal. And I'm happy to answer any question you may have for the scheme and about myself.
Okay.
Thank you.
Thank you very much. Who would like to start? Nicholas,
I have a question already.
You've always got a lot to say.
I'm eager.
Yep.
Right. I used to work in the city, so I like the background. You're around money. With money, how much are you planning to put in? Do you have any of your own capital you're investing in this?
So I'm willing to put approximately 200,000 for the deal.
Okay. And do you have any other assets in the background in terms
I
of
have
your
some
portfolio?
buy-to-let properties.
And you were giving us, just to clarify, you were giving us 40% of the profit.
Plus 10% coupon as well on your equity.
Okay, fine. Okay, that's all my questions. Thank you.
Hayley.
So with the number of projects that you've got on and the experience that you have, who will be managing this project on a day-to-day basis, and what does
I will
your
be
team?
managing that.
You're managing it yourself?
Yeah, so I have a very good contractor I'm working with since last 6 years. So he has been doing all the work for me, and he's a very excellent guy. I already showed him the scheme. I've taken him to the site, and he's confident that he can deliver. I have seen his scheme, so he's very confident.
Have you done a project of this size before?
Not of this size. He has done scheme like 10 flats, 9 flats, 11 flats, but not 30 flats.
Okay. And do you have multiple teams because you've got multiple projects on? Does one need to finish before the next one starts?
I have not employed anybody else, so because
You're
I trust
just working with him?
Yeah.
Okay.
Okay.
Right. Shall we get to the nitty-gritty?
Sure.
Because we've gone all around the houses with Nicholas and so on.
Got more questions.
I know there's more questions. I'm going to ask some proper ones. So,
basically, John's discounting all of our questions as useless.
What is the square footage of the building?
It's over 30,000.
30,000 square feet. Okay. And what have you got down for the build?
For the
square
cost?
foot. For square foot.
It's £250 per square foot plus 10% contingency.
Okay. And it's, how high is it? 6 stories, 7 stories?
It's 7 stories.
7 stories high. Okay. All right. And the sale prices? Who's giving you those?
So I had a schedule from Hampton, and I did my own research as well. So the sale price is coming around £725 per square foot minimum in that area.
750 square foot.
What's the mixture of 1 and 2 bedroom flats?
It's 1, 2 and 3s, yes.
1, 2 and 3.
Yeah.
Okay.
Oh, sorry, can I just quickly ask, what are they selling for? Your 1 bed, your 2 bed, your 3 bed?
1 bed is going for around 450 to 500. 2 beds are going for 550 to 600 depending on the quality. And for 3 beds, they are going over 600.
Yeah. Okay. Good. Ranjan.
So the exit plan is basically to sell.
The primary exit plan is to sell, yes.
What's the exit plan for the, I mean, this is being bought with planning permission in place.
Yep.
It seems like it's been hotly negotiated with the council, and this is the scheme that's been finally approved. It's very, very toppy on the amount of commercial space because there's 2 floors of it. What's the exit plan for that? In terms of pre-letting it and all that sort of stuff.
Okay, so my plan is to convert the first floor of the commercial into resi, which I think will be pretty straightforward because most of the scheme I've seen, council is very favorable towards that. So we can add 4 more flats on the first floor, but for the ground, we will have to either find a tenant and then sell it to maximize the value, or worst case scenario, we will have to sell it as it is.
On what basis do you think you'll get permission for the first floor to be commercial if they've given planning for it to be 2 floors?
Other blocks we have, they already have residential on the first floor. Worst case scenario, we might have to wait, but I have seen application getting successful outcome on the first floors in the past. It's basically, I cannot say for certainty that if I will get it, but I'm very hopeful I will get it.
Yeah, I would, in my experience, after 3 years, 4 years of proving that you can't let it for commercial purposes on the first floor, you've got a good reason then for going back to get it changed. I think you should, look at that sort of length of time.
Yeah.
Paul, just on the numbers, so you mentioned that you've got 200 grand to put in. I think it says, you mentioned that you want 1.6 from us.
So remaining the 1.4.
1.4. Yeah. Okay. And how much finance would you need on top of that?
11.5.
Okay. What advice did you take on the commercial space from a commercial surveyor, or?
I just Googled it. Basically, I did my own research.
Googled it.
Yeah.
Sound like Hayley. She loves a bit of data.
Yeah. I did the research for
the first thing. Yeah. Let me give you some advice. The first thing you do on any commercial space, you ring up some commercial agents and get their advice, because they know what the going rent is next door, the door after that, and so on. You don't just Google it, in my view.
Sure.
Dare I say it, that's good advice, John.
Thank you. Scott.
What's been your involvement with the building up to this point? Did you get the planning consent?
No.
Did somebody else get the planning consent?
So actually, this particular block is part of a very large scheme which has total 5 blocks. 4 blocks are already developed and already tenanted. Some, not the whole, but most of this already tenanted. This particular block is the only left to be developed because the planning was granted 3-4 years ago.
So is the planning extant on this building? Because you mentioned earlier the planning has recently been granted. So if it's part of a bigger scheme and the rest of it's been implemented, I'd have thought the planning is granted into perpetuity because it's already been started.
It's for perpetuity, yes, because the planning is already implemented. So we can basically build any time.
Good point.
So in that case, why is the developer who's done the other 4 buildings not doing this? Why can't it happen?
So that was the question actually, which was difficult for me as well, because it's a very good site with good returns. Why it's happening? So what happened is the company who acquired the site sold the individual block to individual different companies, and this guy who acquired the site for some reason did not build it. So there is a problem which I mentioned in my risk assessment as well. So as per the planning, the substation which needs to be there for the entire scheme was somewhere else, but that power already consumed by rest of the block, so we do not have any power left for this particular block. So we will have to either submit a non-material amendment on the ground floor, or we will have to submit section 73 application to house that power substation which can power the entire block. That's the only risk I have. But to mitigate that, I spoke to 2 very good planners, and both of them are confident that it is even not a section 73 application, it's just non-material amendment and it will pass through.
The other blocks have been built, they're rented out. But
I saw the people living in them, yes.
Yeah, but your intention is to sell them?
Yes.
Yeah, yes. Okay. Well, what have you done in terms of looking at current supply, planning permission that's
there
in
is
place,
a high demand.
sites that haven't been built, the demand?
So there is a high demand there, and basically I'm trying to take a different approach to sell that. So there are quite a few schemes in London, especially some in Sutton, in South London especially, which are being built for a specific locality like people from Hong Kong. So I'm trying to think I can market my block to an independent investor somewhere in either in Hong Kong or Dubai. That's what I'm thinking, but that's how I will be able to sell it off plan. But worst case scenario, we will go into the market.
Okay.
So what timescale are you allowing for this project?
30 months. 24,
13?
30, yeah.
30, so 30.
Yeah.
Okay.
24 for build, 6 for sell.
Okay.
Have you secured the site?
Yes, the offer is already accepted. Yes.
The offer's accepted.
What is the situation with the other blocks of flats? Have they been sold off? Or
So the 2 blocks are owned by Haringey Council itself, and they are tenanting them.
Great. Now, that for me is a problem. Why do you think that's a problem for me?
They are not definitely the tenants. I'm not sure whether they are on benefits or they are normal tenants from the market.
Very good answer.
Yeah.
But that's a problem, isn't it? Could that be why the guy's selling this final block? Because if you develop it and you've got, social tenants next door, that's not easy.
So that is the question I still need to find answer, which tenants are there, which I could not, but I will definitely find out. But the access to those blocks is totally different from this block on the behind
And it is
side.
London. But the question I always ask,
Yeah.
the question I ask when I look at a development is, would I let my daughter live there at night? And all the rest of it. Now, if it's a good area, and Ranjan is of course, he doesn't do anything outside the M25, so he actually knows where this is for a change. So Ranjan,
Just down the road.
No, I do outside the M25. This is an okay.
Leicester once?
This is a good area, but I think it's a good area. He's mentioned there's separate entrances and exits, but I think the reliance on expecting a foreign investor to basically pay above market or give an easy exit, I think is probably a bit fanciful. And I think as with all these things, it doesn't really work as a private rental scheme because of the configuration of flats. There's some 3 beds which typically are social housing in that sort of area.
And the average sale time in that area is 60 days.
Okay.
The average.
but you sound a bit like
that's the general market, right? That's not new builds.
And new builds
Which is
next
quite
door to
different.
social housing.
Exactly, yeah.
It's not social housing, it's tenanted by the council.
Well,
That's the same thing.
listen, your pitch is great because that's exactly what I would say. But the truth is, it is social housing.
Yeah.
Because the council let to whoever, and rightly so. That's their job. Their job is the council's job is to let accommodation to people that can't afford their own to buy. So it is social.
It's more of a problem because obviously you have to look at your exit. And as someone that wants to own and occupy, do I want to live next door to 3 blocks of flats all tenanted with social housing tenants? And the answer is no. So the likelihood is you would be stuck with these properties, have to rent them out, and then have a very low yield.
But if the yield is low, it will then impact your ability to get buy-to-let mortgages and finance to pay off the development loan that you need, as well as the investor. Because don't forget that together with the finance and the 1.4 million pounds of investment, you're going to owe somewhere around 11 million pounds before interest charges. So you put, say, I don't know, £1.5 million of interest on, you then at 12.5, 13 million quid of interest plus your profit share. So how does the investor get their money back after the development finance, after the coupon on the loan notes? So, and if the yield is only 3%, you may well have a problem.
Because your GDV is definitely pricing higher than the average sale price for 1 and 2 beds. I haven't checked 3 beds, but I just checked 1 and 2. And I picked up an average of 442 for your 1 beds and an average of 548 for your 2 beds, which would bring down your GDV quite a bit.
I think the problem here is that when you're looking at identical flats in adjacent buildings, so some owner-occupier's got to come along with 400 grand to spend on a flat, and they're going to be thinking, do I want to spend 400 grand on a flat next door to people with identical flats, which are in there for social housing?
Yeah.
It's not very aspirational, and that. And the data that you get off the internet doesn't really show that psychological thing in buyers' minds.
You need to talk to some agents and get some agents, not just one agent's opinion, a number of agents' opinion. The data, and I know, Hayley, you really swear by this data, and I do understand where you're coming from, but sometimes you need to pick up the bloody phone and you need to talk to people, talk to the agent, get them around there, and they are the experts in that area.
Where did the build cost come from?
So I basically based on my contractor charges, so I put like £250 per square foot. That's what
So you
he's
haven't had
charging my
any
existing
quotes or
scheme.
anything?
I did not have the quotation yet because I don't have the design yet.
Yeah, okay.
So I would have at least £300 a foot in for the work because it's London. We're not sure what the ground conditions are at the moment. You know, it could be more than that, but I don't think it would be a lot less. So your net profit isn't going to be
6 point
It's
something
going to be
million,
less.
yeah.
Summarise, Scott, and then we can get some decisions made.
Okay, so you're buying a site for £2.9 million. It's going to cost you in total £9.1 million by the time you include the Section 106s and the contingencies and et cetera, et cetera. Okay, so that stands you in at roughly speaking £12 million, of which you've managed to raise on development finance 87%, which is give or take £11 million. Okay, with the £200,000 that you're prepared to put into it. So you're looking for the 1.4 million, which is the difference between the total costs, the 200k that you're putting in, and the loan money that you're going to get to build it all out.
Yes.
Okay, so we know where we're at. And in terms of the GDV, you believe that the GDV, the end value, is somewhere around £20 million, which before finance leads to a profit of £8 million.
Before interest.
Before interest costs.
Yeah, before interest, yes.
Before interest costs.
Yes.
Or £6 million, £6.5 million after interest.
Correct.
Okay.
So it's a profitable scheme.
Yeah.
Can I go first, John?
Please do. Paul.
I think all of your numbers are based on best case scenarios, which isn't what they're based on best case scenario, in my view anyway. Based on best case scenarios, and the people involved in the project don't have the experience of doing a project like this. So the risk of things going wrong is higher than if you did. So I think when you look at things like the build cost being probably a little bit low, the end values probably being a little bit high, the risk of the social housing and the power station, I think to me that explains why this person hasn't built it out, and that's why he wants to sell it to you. So for those reasons, it's not for me.
Okay. Who'd like to go next?
Okay, a couple of things. I think it was a great pitch. I also love the fact that you included a coupon rate on our capital, which is something we don't see often enough. I thought that was terrific. As I said, I've mentioned I've got concerns about the exit. That's my primary. I just don't kind of buy into that. I also prefer deals where we are doing the planning or the permitted development, because when you're just doing that element of it, your profit pretty much has to come from building out, which is a lot more challenging than if you've got planning gain in there as well. Okay. So it's not one for me, but thank you very much.
Hayley.
I'm with Ranjan on this one. I'm not confident on your exit. I think your GDV is optimistic. Looking at the comparables that I've just quickly looked at. So I do think, as Paul said, you've looked at best case scenario. It's not for me, no. But it was a great pitch and good pack.
Nicholas?
I mean, I agree with Ranjan, believe it or not, absolutely.
This makes a change.
I thought you agree with me.
It does, and I think the big red flag for me is the fact it's been resold on twice. First to the buyer, and then he sold on as an option to someone else, and now onto you.
Yes,
so 3 times. You don't have to answer. It's okay. I'm just, there may be valid reasons for that, but I doubt it. And I think the bit I'm agreeing specifically with Ranjan is that you're now just working for you're a construction firm, earning your construction money. There's not enough value to add to the site for such a big risk. So yeah, it's not one for me. Thank you. You pitched well, and you're very credible.
Scott, from a funding point of view and everything?
So this would be too big a project for me, but I loved your pitch. I loved the way that you answered many of the questions. You were honest in the things that you didn't know to say that I don't know that, I need to go away and find that out. And I think that's a really good trait. Often we see people where they try and wing an answer where they don't know. You said I don't know, I need to find it out. I respected that. And I wish you all the very best with this. On the journey that you've been on, this may well be the next step, albeit it's a bigger step in your journey, and I wish you all the very best.
Well
done.
Thank you.
So that just leaves me. What do I think?
Money bags in the middle.
Okay.
You're going to go into source the site, to you, John?
So I think there's too many questions at the moment to say to you, look, let's do a deal. I think you're being a bit greedy on what you're suggesting, and if I were to make an offer, it wouldn't be on the terms that you've offered. It would be on a much higher term benefit to me, less to you, a lot less to you, to be quite honest with you. So it's not a deal today, but I'm very happy to, if you'd like me to, spend a little bit of time on it next week for you and see whether we can make it work.
That's a very fair offer.
Thank you very much.
Is that all right?
Yeah.
Would you like me to do that?
Of course, I will.
Okay, that's very good. We'll do that. Thank you very much for coming in.
Thank you.
Very
Thank
good.
you, everyone.
So, I liked him.
Yeah, of course.
Nice man.
The more that he talked, the more that I warmed to him, his past experience and the project itself.
He's got too much on.
He's
Clearly, but
too ambitious.
The ideal person for me is somebody who's got something at the planning stage, something halfway through, and something that's just finishing. Okay, and he's got projects at the different stages of the life cycle.
he has.
This might be a big step for
I
him
think
on the
it's
next
too-
stage of his journey, and that might be too much for him to do, but I love his ambition and I love his thought of so many things.
I don't think this is too big for him. I just think the project has many risks, and it's too many, because he's done 10 flats. There's not that much difference to doing 10 and 29, quite frankly.
Say that.
It's three times.
It's three times, but it's just about scaling up. I mean, it's not a big deal. The issues are with the site itself and the
I
exit.
agree with you.
It's not a deal. The deal is not good, and the fact that it's been passed around from pillar to post shows that a lot of people haven't managed to crack
I think the
it.
unfortunate thing is it probably didn't have enough time to have all the right things for such a project so large as well.
Yeah,
you know,
good
things
point.
like
You know,
the
you-
commercial rents, the
I agree. You
costs,
need-
all that
you
sort
need
of
to-
thing.
you need-
We're never going to do a deal of that size without those answers.
Exactly. And do you need to deal with the guy who's got the option? When does the option run out? Can he go direct to the owner of the site and have a deal with him and cut out the guy with the option? Because the option,
You risk it being sold on the option in the meantime, of course. But yeah, if you can shape something
knows?
off the purchase
Who
price, it's
knows?
going to help, isn't
But
it?
that person's obviously taken that option on the basis of building it out, probably, I would have thought. And then he's found an issue.
or
Yeah,
didn't want the competition,
Yeah.
and because he's done the others.
The answer was
There
it's
may be
not
some-
big enough
Or
for
the
him, right?
exit,
Or the
it's
exit
solid.
option then.
Or the exit next. Anyway, look, let's
Genuinely
see,
think
and
it's down to
I'll
the
report back to you all
Report back
by
to John.
WhatsApp. There you go.
Welcome back, Vinay.
Hello.
How
Thank you
did
very
you
much.
find that experience?
It was really exciting. Yeah.
Yeah?
Yes.
Was it the outcome that you'd hoped for?
Yeah, so the outcome is positive actually. So John offered me to look into in more detail. So he uncovered some of the risks related to the project.
Okay.
And he will look into it in more detail and then will come back to me.
Great.
Because I did not have all the answers for the questions they raised, which were very, very genuine questions. I did not think about it before. That's the benefit of working with the people more experienced than myself. They help uncover the risk I couldn't identify in the beginning.
Absolutely. So what's your next step then?
So I will find the answers for the questions they raised and I will come back with the answers, and then I will approach John because he offered to help me further in the deal.
Excellent. Well, thank you so much for coming on Property Elevator today. It's been a pleasure having you, and best of luck with the project.
Thank you very much indeed. Thank you.
Wow, what an episode, hey? More deals and more drama. That's all we've got time for though today, but we will see you next time on Property Elevator.